The Agricultural Business Chamber of South Africa is disappointed with Botswana's import bans on fruits and vegetables. Botswana's latest move has been supported by the Citrus Growers Association of Southern Africa. Joining us to tell us why they are not happy with the banning of SA fruits and vegetables is Theo Boshoff, CEO of the Agricultural Business Chamber. Theo, a very good afternoon to you. Thanks very much for your time. Was the South African exporting community forewarned in time about Botswana's decision?
Yes, no, thank you very much for the opportunity. And I think it's a little bit more nuanced, perhaps than what it initially seems. And I think reverting to Citrus Growers Association statement on the citrus, but speaking a little bit more to the vegetable elements, we have had challenges the last few years, so it's not an isolated incident. Just for some background, I mean, we are a common market within the Southern African Customs Union, which means that there should be free trade flowing between the markets, but of course, South Africa, Eswatini, Lesotho, Botswana, and Namibia. But there have been isolated incidents such as this one. And I think some of the challenges really is the predictability and information base on which these decisions are taken. There are provisions in the agreement that does allow this that does allow what's referred to as an infant industry protection clause. In other words, if one of the countries do want to foster an infant industry within the first 8 years of its existence and want to give it some protection, there are provisions made for that. But then, of course, a proper process must be followed, to trigger these provisions. And I think this is really where the challenge has come in. So on the principle side of it, there are means and ways to work around it, but the challenge really is just predictability.
Before we get to how this matter can be resolved, just let's stay a bit on what you just said, that this is allowed, what you call infant industry protection laws. Are they being applied now? Is Botswana applying those?
Question.
Yes.
That's the question. So the notice that we have obviously is that the borders have been closed. There are other reasons why certain products, agricultural products especially, are not allowed to flow, and those are pest control measures to make sure that pests, for instance, or animal diseases don't cross the borders. That's sort of a separate issue. The infant industry protection clause is what perhaps can be used under the SACU agreement. There are some questions around exactly what measures are permitted under that, whether it's simply placing tariff barriers on products imported from within SACU, or whether you can actually physically close a border. So there are still questions around that. But I think the nature of the unpredictability of this notice is that the infant industry protection clause is designed in the SACU agreement for this purpose, but we actually as an industry don't have clarity whether or not that has been triggered. There is also a time-bound status. After it has been triggered, there's an 8-year period for which a country can apply certain measures, and then after that you have to have equal competition. Basically, the grace period is 8 years to foster the industry, after which there has to be sort of free trade and equal competition. Now, exactly when the 8 years run, whether or not this is the provision that has been triggered is a bit of a question, because from time to time on different products, and also on a product-by-product basis, we have seen borders closed and then open again, closed and open again, depending on whether or not another SACU country can meet their own demand at that time, but thereby is also some specific challenges.
Yeah, I was just looking at the reportage of this matter, and one isn't able to put a finger on whether, for example, there is some people suggest, or certainly in the way they put this, or they discuss this matter, whether you are left confused as to whether someone is suggesting that the Botswana are being malicious, on this, or because of, perhaps in part, because the rules aren't as clear or as straightforward as you yourself have just suggested. This matter is being handled perhaps a bit clumsily.
I would say so. Certainly I don't think there's been any indication that it's malicious. I think everyone understands, and every country has got the right to obviously foster their own economic sectors. But where the challenges also come in, you're looking At the moment, obviously at the producer level. So the purpose of it, as we understand at least, is to protect producers with, by producers, obviously I mean farmers of the different commodities in that country from competition coming from South Africa, for example. The challenge is that there are other role players that also must be taken into consideration, specifically the retailers and of course the consumers. Because what has taken place in the past, and it remains to be seen whether that will be the case at the moment, but where we have seen border closures for especially vegetable products, um, typically these sort of government measures and a border closure doesn't respond as quickly or swiftly as the market does. So I know the production obviously is of various commodities is busy improving or going up in our neighboring countries, but it's not necessarily sufficient to meet the domestic demand the whole year round. There are these supply and demand dynamics that need to be better understood. And the discussions we've initiated, both with the South African government, other SACU countries' governments, as well as their business sectors, is to make these decisions based on good, solid information. The last thing that you want are obviously shortages of a product in a neighboring country, because that will automatically push up the prices significantly for consumers. So if you can do a proper mapping exercise, and some of the commodities have started doing this, in terms of what is the production across what seasons compared to the demand. Then you at least have an information base, on which to base these decisions. But the risk as well, again, if you impose something like a complete closure of the border for certain items, it typically isn't as responsive to remove those. So you might have market fluctuations and perhaps the price being artificially raised, for periods of time if there are shortages, which is obviously to the detriment to the consumer. So it's a fine line, and it must be information based.
Now, where are these conversations within and between these countries? Are they continuing, and are they as agile as they are supposed to be, given everything you've described?
So the conversations are government to government predominantly. For the South African government, it would obviously be DIRCO, Department of International Relations, as well as the Department of Trade and Industry, which is primarily responsible for our trade strategy and many of these mechanisms. So they are taking place. The role of private sector, we have offered as well to work with the private sector in the different countries, both on retail and production level, just to ensure, to try to get the information base. Ultimately, these decisions are not made by industry, it's government decisions, it's regulatory bodies that make these decisions. But it must be done on good information. And the role of private sector, I think, is to ensure that there is good information. The other role that private sector can certainly play, and this is ongoing on a commodity by commodity level. You mentioned the citrus growers. I know Potatoes SA and a number of other commodity associations are quite active in other SACU countries, and they're actually part of our same value chain. To have proper competition and for a free market to operate, you need obviously all parties to be competitive and to operate from an equal basis. So much can be done in terms of providing technical assistance, making sure that producers in all these SACU countries have got access to the right genetics and the best technology to actually increase the production potential of our neighboring countries as well to meet where they are. Another good example, being spoken of citrus as well, and just the integration of these value chains, the support services, the inputs, as well as the marketing channels often transcend national borders. Something like high value fruits, for instance, that we export, very often it's treated as an entire trade block that exports further abroad, perhaps to the EU and other countries as well. So there's a lot of integration that is taking place, and it might be, to an extent, I think, a bit short-sighted to look purely at the domestic South African market, the domestic Botswanan market, for instance. We are a common market, and we need to see how we can firstly meet our own demand on a consistent basis so the consumer is not prejudiced. And then on top of that, grow production and grow quality as well as quantity so that we can export excesses from the entire region further abroad, where hopefully we can earn lucrative revenue, whether it's dollars or euro, for example.
This is a quick one, perhaps, to end the conversation. You mentioned right at the beginning that there have been, as you call them, challenges in the past few years. And one wonders whether leaving those challenges, or where leaving those challenges unattended, may then put the conversations you're saying are happening on a government-to-government basis, even to a point of a hardening of attitudes, because perhaps one party blames the other or feels the other one, didn't do what they were expected or do what they were supposed to do.
Yeah, you see, that's sort of the last thing one wants. And I think there's a lot of efforts underway to prevent that from happening, probably on the diplomatic level, ourselves just speaking business to business with the neighboring countries, but certainly on a diplomatic level that is taking place. Bear in mind as well that the SACU agreement, the name of a common market, is not limited only to trade within Southern Africa. If we wanted to go into a free trade agreement with countries in the Far East, or perhaps post-AGOA with the United States, for instance, to continue having preferential access into those markets for many of the products that's exported from Southern Africa, it's not a decision that countries take purely on their own, because we have got a free market. So when we have these discussions on trade agreements, it's not just South Africa. It would be SACU first need to reach agreement in terms of our appetite, the condition, the tariff lines, etc., which products are included, excluded, and before a free trade agreement further abroad can be reached. So essentially, the SACU does mean that we are one common market within these Southern African countries.
Okay.
Where import tariffs are also applied, which is the case, obviously, on various products that's imported beyond SACU into the SACU market. There's also a tariff sharing methodology, which is absolutely vital, and I think all the countries rely on that revenue. So import tariffs are also apportioned to the different countries when we do put import tariffs on. So all of these systems take place on a day-to-day basis, and it's beneficial for all countries.
Okay.
So I think on that basis, all the governments will do the utmost best to ensure that a relatively isolated incident such as this doesn't derail the mutual collaboration that we have and that we need within SACU.
Theo Boshoff, thanks very much for your time.
Thanks for the opportunity.